Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
Welcome back to The Deep Dive. We're diving into strategic deal sourcing for family offices today.
Always a hot topic.
It really is. We're focusing on the lower middle market, especially for those businesses valued between, say, $2 to $50 million.
That's sweet spot. Yeah.
Exactly. And we're using this white paper as our guide, Playing to Your Strength, Strategic Deal Sourcing for Family Offices. We're going to unpack how to find and structure those killer deals for maximum returns.
Yeah, the paper really nails it, especially for how family offices can stand out from the crowd.
It does. One of the first things that jumped out at me was this idea of proprietary deal flow. Sounds kind of mysterious, almost like a secret stash of investment opportunities. What's the reality there?
Yeah, it does have that kind of almost mythical feel to it.
It does.
And there's a good reason for that. Proprietary deal flow basically means you're accessing deals before they hit the open market. Before the investment bankers start parading them around to every private equity firm out there. So you're getting in early, which is where family offices can have a serious advantage.
Okay, so less competition sounds amazing, but how do you actually make that happen? Is it all about who you know?
Knowing the right people definitely helps, but it's not as simple as having a giant contact list.
Right.
Family offices can really use their unique strengths to build this proprietary deal flow. You've got flexibility, you don't have the same pressures from LPs that a traditional fund might. Plus, you can bring more to the table than just money.
That makes sense. You're not just another face in a bidding war.
Exactly.
I'm still curious about the how, though. How do you uncover those hidden gems?
The white paper talks about creating a network of, and I love this term, deal-aware individuals. These are people who are deeply connected to the local business scene, like, attorneys who specialize in M&A or estate planning, accountants who work directly with business owners, commercial bankers, those who really understand the financial health of companies in their area. They're often the first to know when a business owner is even thinking about succession planning or needing an investment partner.
Oh, that's interesting. So you're tapping into that network before a deal even formally exists.
Exactly. It's being proactive, building those relationships, and showing you're a reliable resource.
I see.
Family offices can also tap into their own industry expertise, too. Say you've got a deep background in manufacturing. Get active in industry groups. Hit those trade shows. Network with other manufacturers. You'll be surprised what you pick up just by being present and engaged.
That's a much more focused approach than just hoping a great deal magically appears.
Oh, absolutely. And there's another piece to this puzzle, too. Defining your investor brand.
Ooh, interesting.
This isn't about showing off a fancy logo. It's about being crystal clear about what you're looking for as an investor. Your criteria, the industries you focus on, the size of deals you want, your overall philosophy. The more specific you are, the better your outreach will be.
Like a magnet, drawing in the right opportunities and pushing away those that aren't the right fit.
Perfect analogy. If someone knows you're a family office with deep roots in, say, logistics and a history of successful investments in that sector, they're much more likely to bring you a deal in that space.
Got it. This is starting to make a lot of sense, but I can't help but feel it's a bit theoretical still. Do you have any real-world examples of how this plays out?
Sure. Let's paint a picture. Imagine a family office that's been in the food and beverage industry for generations.
Okay.
They've built a really strong network, industry veterans, distributors, even packaging suppliers.
Wow.
And through this network, they hear that a successful regional bakery doing about $10 million in revenue is going through a generational shift.
Ooh, interesting.
The founder's thinking about stepping back, but wants to see their legacy continue.
Okay.
This is where those deep industry connections and a focused investor brand really pay off. They can approach the owner with a strong proposition. they get the bakery business, can offer more than just money, and are genuinely passionate about helping that business thrive for the next generation.
And because they were plugged into the network early on, they're not fighting a bidding war with a dozen other firms.
Exactly. They can negotiate a deal that works for everyone. Maybe take a minority stake, provide some growth capital, even bring in someone from their network who has scaled bakery businesses before to help the company expand.
So it goes beyond just the numbers on a spreadsheet. It's about understanding the industry, shared values, and a true partnership.
Couldn't have said it better myself. That's where family offices really stand out in the lower middle market. They build relationships and structure deals that might not make sense for a larger, more institutional investor.
This has been eye-opening. We've covered a lot, from the power of proprietary deal flow to building that targeted network and nailing down your investor brand.
There's a lot to unpack.
It is. We'll be back in a moment to dig deeper into how family offices can use their unique strengths when it comes to deal structures. I think that bakery example really drives home how family offices can stand out, when it comes to sourcing deals.
Yeah, for sure.
But the white paper also makes a great point about deal structures themselves being a strategic advantage.
It's huge. And it all ties back to playing to your strengths. Family offices, they often have more options when it comes to structuring deals compared to, say, a private equity fund.
Yeah, we touched on this earlier, that whole spectrum of deal structures, right? Buying a company outright to minority investments and those strategic alliances. Well, what does that actually look like in practice?
Let's zoom in on the lower middle market.
Okay.
You've got a business owner who's built a solid company, maybe pulling in like 10 to 20 million in revenue, and they're at a turning point. Maybe they want to cash out a bit, bring in some fresh expertise for growth, or they need a succession plan in place. A typical private equity firm might not be the best fit there.
I can see that. Their whole fund structure and the returns they need might push them towards a full acquisition or at least a controlling stake, which might not be what the owner's after.
Exactly. A family office can come in with a more, tailored approach.
Okay.
They could structure a deal where they take a smaller piece of the pie, a minority stake, inject some growth capital, and even offer their own hands-on expertise to help the business scale up.
So it's more collaborative, kind of entrepreneurial.
That's a great way to put it. Family offices tend to have a longer investment outlook.
Right.
They're not in it for the quick flip. They're genuinely interested in partnering with businesses they believe in, helping them achieve their full potential.
The white paper uses this term, patient capital. Really captures that philosophy, I think.
It does.
But isn't that kind of flexibility a risk, too? Is there a downside to being too accommodating?
It's a fair point. You always got to do your due diligence, have clear criteria, and make sure the deal makes financial sense.
Of course.
But I think that ability to be creative and tailor deal terms is a major advantage, especially when you're dealing with business owners who are emotionally invested in their companies,
It's about building trust, finding that win-win situation.
Absolutely. And that's where those less tangible strengths of nameless, faceless institution.
Right.
You're a family with a legacy and a reputation to uphold. That can be really appealing to any business owner who's looking for something more than just a transaction.
Okay, I'm getting a clearer sense of how these structural advantages work. But let's get even more specific. Can you give us some real examples of deal structures that would appeal to both family offices and business owners in the lower middle market?
Of course. One structure that's gaining traction is a recapitalization. It's where a family office pumps in some capital, usually a mix of debt and equity, to help the owner achieve a specific goal. Maybe it's funding an expansion, buying out a partner, or just giving the owner some liquidity without them having to give up control.
So you're providing capital without shaking up the ownership of the business.
Precisely. And it can be a win-win. The owner gets the money they need, and the family office gets a foothold in a promising business with the potential for good returns.
Interesting. What about when an owner does want to exit, but maybe not completely?
That's where a structured sale can work well.
Okay.
The family office might buy a majority stake, but allow the owner to keep a minority interest. Maybe even stay involved in a leadership role for a while, for a smooth transition.
So a more gradual exit, giving the owner time to step back while making sure things are handed over properly.
Exactly. It can be especially attractive to owners who are concerned about the future of their business and their employees, Knowing their company is in good hands with a partner who shares their values, that can give them real peace of mind.
Makes sense. We've talked about recaps and structured sales. Anything else? Any other creative structures family offices might explore?
Oh, absolutely. Family offices are also in a great position to consider control investments.
Control investments.
Yep. These are deals where they take a majority stake, but with built-in safeguards to protect the interests of the current owner or management team. Things like, board representation, veto rights on certain decisions, or even earnouts tied to performance goals.
It sounds like control investments balance that need for control with keeping the existing management team engaged and motivated.
That's the idea. This kind of structure can be a real win when the management team is strong, but the business needs a cash infusion or some strategic guidance to really level up.
I'm seeing a pattern here. It's about finding the right fit, understanding the owner's needs, being flexible with the deal structure, and bringing more than just money to the table.
You nailed it. That's exactly why family offices are such a good fit for the lower middle market. It's a space that rewards creativity, patience, and a genuine commitment to building long-term partnerships.
This has been a fascinating look into the world of deal structures. We've explored how family offices can use their flexibility and that long-term vision to craft deals that work for everyone. And next, we'll go beyond the structure itself and talk about how to actually build that network of deal-aware individuals who can help you source these fantastic opportunities. So we've talked about that proprietary deal flow and how using creative deal structures can really give family offices an edge in the lower middle market.
Right.
But it all boils down to actually finding these opportunities.
Absolutely.
And the white paper really emphasizes building that network of what they call deal-aware individuals. So who are these people and how do we actually find them?
It's almost like putting together a team of your trusted advisors. Each one brings their own perspective and connections to the table. Think about the professionals who are always in the mix when business deals are happening. Attorneys who specialize in M&A or estate planning, accountants who work hand in hand with business owners, commercial bankers who have a real feel for the financial pulse of companies in their area. Those are all potential gold mines for deal flow.
That makes sense. These are the people who are often right there when the big decisions are being made. But wouldn't they already be connected to those bigger investment firms or private equity funds? How does a family office break into that inner circle?
It's a good question. It's definitely not about just strolling into a networking event and expecting deals to magically appear. It takes time. It takes effort to nurture those genuine relationships. And remember, family offices often have a different approach than those traditional financial buyers. You're not just chasing a quick buck. You're looking to build something lasting, add value along the way. That message, it really speaks to a lot of business owners, especially in the lower middle market.
So it's about playing to your strengths, building trust over time. What are some practical ways to actually connect with these deal-aware folks?
Well, there are a few things I've seen work really well. First, tap into your existing network.
Okay.
Talk to your own advisors, your family, friends who are entrepreneurs themselves. You'd be surprised how often is a friend of a friend who turns out to be the perfect connection.
It's all about those connections, right? Those 6 degrees of separation.
It really is. Second, get involved in your local business community. Join those industry groups, go to conferences, trade shows, even volunteer with organizations that support entrepreneurship. You'll naturally meet people who are plugged into the deal scene.
So being present, being engaged.
Yeah.
Showing you're serious about investing in the community.
Exactly. And third, don't underestimate the power of just reaching out directly. If you find an attorney or an accountant who you think would be a good fit, just get in touch.
Okay.
Invite them for coffee. Share your investment philosophy. Tell them what kind of deals you're hunting for.
So be proactive. Take that initiative to build those relationships.
Exactly. And remember, it's a two-way street. You're not just asking for something. You're bringing something valuable to the table, too. Access to capital, expertise, that long-term vision. That can be really attractive to business owners who are looking for the right partner.
This has been so helpful. We've covered a lot of ground today, from sourcing strategies to deal structures to networking tips. Any final words of wisdom for our listeners who are ready to jump into the world of lower middle market investing?
I'd say be patient, be strategic, and be yourself.
Oh.
Building a successful deal sourcing engine, it takes time. It's about figuring out your strengths, putting together that network of trusted advisors, and just consistently putting yourself out there.
Great advice.
And most importantly, remember, it's not just about the numbers. It's about finding those partnerships where you can make a real lasting impact.
Absolutely. On that note, here's a challenge for our listeners. Think of 3 people in your network who could be valuable connectors and reach out to them this week. You never know what opportunities are just waiting to be discovered. Thanks for joining us on The Deep Dive.
Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.